Today, we're going to take a closer look at 26, yes, 26 stocks impacting the overall AI semiconductor market. And this video is also going to solidify why this is the world's greatest semiconductor investing and AI investing channel here on YouTube. So we got a lot to cover. Let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, so to start off the episode, I kind of chose the three most popular stocks, and we're starting off with the AI chips, right? Everybody knows the AI chips, but throughout the episode, we're going to start to dig deeper into the supply chain of the AI market, into the semiconductor market, from manufacturing to specialized equipment, and the list goes on and on. And for each section, I'm going to take a closer look at what are what I believe are the growth opportunities, my overall thoughts, and maybe some of my top picks, and overall market caps as well. Some of these companies are below $10 billion, which can definitely be exciting for certain investors. So with stock number 1 to number 3, we're going to see the top 3 players that pretty much make AI chips right now. Number 1 is obviously Nvidia. Nvidia creates their H100, right? This is the king of the kings of AI right now, and they're pretty much leading the market. Number 2, we do have AMD, and AMD does have their MI300. Then we have Intel. Intel has various chips for the AI market as well, but their most popular right now is the Gaudi 2, thanks to their acquisition of Habana. So I'm going to kind of talk about these in each segment. First, can they outperform the market thanks to AI? And for these 3 players, I want to say big yes. And when I'm taking a closer look at the overall market, I'm thinking of 2 things. First, the overall stock market, which would be something like the S&P 500, but more importantly, the semiconductor market, because more times than not, the semiconductor market continues to outperform the S&P 500. So for these 3 plays, I do believe the answer is yes, and a big yes. I do believe all 3 can outperform the market, but when you have the huge opportunity to beat the market, you also have the risk to underperform, in my opinion. Out of these 3, my main pick would be Nvidia. And the reason for this is the growth opportunities for all these companies can jump dramatically if the demand for AI continues on its current trends. And with Nvidia holding over 90% of this market, has the most to win, especially as it has the best chips of them all. And right, if this market is really, we saw from AMD, this is a market that's expected to go to over $400 billion by 2027. If Nvidia takes 90% of the market there, that's a lot, and a lot of revenue. Even if Intel and AMD take minimal market share, it can still equate to massive revenue growth for both those players. Now, obviously here, the big risk is if the demand is not as strong as many anticipate for the overall AI space, these companies can obviously fall hard. Here, Nvidia obviously has the most risk here because a lot of investors are already expecting Nvidia to gain from this momentum. Now, stocks number 4 and 5 are chip design companies. But before, let's just take a closer look. We can see Nvidia right now, market cap of $1.3 trillion, sitting at 547. AMD is right now market cap of $236 billion, sitting at $146. Intel sitting at a market cap of $198 billion, roughly $200 billion. Now, the next 2 companies, stocks number 4 and 5, are AI chip design. So before a chip gets even made, it has to get designed somewhere. And that's where these 2 players come into, Cadence and Synopsys. Both these players are used for the design process and the circuit simulation of these AI chips. Now, if we're just going to jump into the question, can they outperform the markets thanks to AI? I do believe yes, and my main pick is usually Synopsys. I do believe both are going to be very similar to each other, but the growth opportunities here is various companies, right? Not just Nvidia, AMD, but we also have other tech giants and startups. And startups are starting their own and developing their own AI chips. And so obviously this means more licenses for these kinds of software. We also see new generations of chips continue to be made. So every chip, right, they have generation 1, generation 2, generation 3. So you need to continue to have these licenses. And even there are chips out there that might have never seen the light of day, but they still go through the design process. Another great thing about these 2 players is they're not susceptible to your typical over inventory correction that happens in the semiconductor space. obviously one of the risks is usually these two tend to trade on a premium. And if you guys want to see kind of a deep dive on any of these, let me know in the comments below. Obviously, 26 stocks, we're going to look more of a top level overview and my overall growth opportunities. All right, and here we can see Cadence Design System, ticker CDNS, market cap of 73 billion, up 55% in the past year. Synopsys, pretty much like I mentioned, both these two are going to follow similar trend in the past years, up 47%, and this is ticker SNPS. Now, stock number 6 is going to be the chip manufacturing, right? So after the chip design is finished, we're going to send it over to get manufactured. The biggest player here is TSMC. There's another big player out there is Samsung, and incoming is Intel. But I really wanted to take a closer look at more companies that are based in the United States, or if they're not based in the United States, at least can be traded in the NASDAQ or in the New York Stock Exchange. I didn't want to look at international stock exchange at the moment. So TSMC is obviously a big player here. Now, this might angry some people, and the question is, can this one outperform the market thanks to AI? And for me, I'm gonna say, man, I really don't think so. And if it does, it's not gonna be by much. So when I say that, it means that I would rather just invest in an ETF or in the overall semiconductor market than invest in this one individually. The main reason is while TSM does manufacture almost all of the AI accelerators, right? They are the manufacturers of Nvidia's AI chips. The volume of AI chips is nowhere near the volume of your mobile, of your laptops, or other consumer processors and other consumer semiconductor solutions. And for manufacturing companies like TSMC, it's all about volume, right? The more volume you have, the more margins you're going to improve. So for me, I think this is a company that trades more with the semiconductor being in a bullish trend. And I do believe that's what's happening right now. We are kind of seeing a bullish trend right now, but it's not going to be thanks to AI. Utilization capacity rate can increase, but there is more of a bullish turnaround and a bigger impact from the overall semiconductor consumer market, which could obviously help with margins increase and obviously push in long-term contracts. The risk here is if the demand is not as strong as anticipated for AI, that's fine. As I mentioned earlier, this is a company that depends more on volume. And if there is less volume from AI, that's okay because it doesn't make a big portion of the volume compared to other consumer products. If we take a closer look at TSMC, ticker TSM, market cap of 488 billion, and we can see in the past year it has underperformed the overall market. It's only up 13.7%. Now we're going to take a closer look at some other episodes, some other companies, but if you guys appreciate the episode and if you're learning a lot so far, remember we still have a lot of 20 other stocks to look at. Make sure to hit the thumbs up. Make sure to hit the subscribe button. I'm trying to hit 30,000. We're like 20 away, so I definitely do appreciate that. I do have a membership program where I do have some deep dives. Click join to learn more. There are some interesting companies there below $10 billion that we've talked about in past months in this membership program, so make sure to check that out. Also, if you want to continue to support the channel, look at fool.com/Jose for my special offer. Now, stocks number 7 to 11, here are 4 stocks, are manufacturing equipment. So we saw TSMC, but for TSMC to manufacture these chips, they need special equipment. And here we have 4 companies. We have ASML, Lam Research, Applied Material, and Clack Corporation. So first, let's just look at overall price. ASML past year up 8.3%, market cap of $284 billion. We have Lam Research, ticker LRCX. Lam Research past year up 61%, market cap of $100 billion. We have Applied Materials, ticker AMAT, market cap of $125 billion, up 38%. We have Clack Corporation up 34%, ticker KLAC, market cap of $76 billion. Now, for those that are not familiar, in the semiconductor manufacturing process, there is a huge different types of steps that go into it and different types of process and equipment needed. Here we can see some of the big players that I just mentioned: ASML, Lam Research, Applied Material, and Clack Corporation. If you actually want to learn a little bit more about these players, players, we can see that, hey, look, Applied Materials, they offer tools for things like chemical vapor deposition, physical vapor deposition, etching, ion implementation, which is essential for constructing the multiple layers and features of semiconductor devices. ASML is pretty much known for their photolithography machines like the EUV, which are needed to manufacture. And this is pretty much a monopoly of any type of chip below, I want to say 7 nanometer to some extent, with very high yields. We have Lam Research, which also focuses on things like etch and deposition. And then we have Clack Corporation, which focuses more on like yield management. They have tools that kind of do for the inspection process to make sure yields are holding properly for these semiconductor manufacturers. Now, the question is, can they outperform the market thanks to AI? And I'm going to say here, I'm going to go meh, if not so much. These are players, again, that I would rather focus on a semiconductor ETF. While equipment for manufacturing AI chips is crucial at the moment, it all depends on volume. And right now, fabrication plants, or the manufacturing plants that we look at, are not bottlenecked by manufacturing lines. But I want to say right now, there are other growing opportunities happening in the semiconductor space. Like there are numerous countries building their plants to remove the dependency of countries like Taiwan from supply chain. The main risk here is equipment is very expensive, right? And if we kind of take a closer look here, I do have this chart from BESI. We can see these are all plants that, as of June 6th of 2023, so there have been some new plants that have been introduced already. But we can see that these are plants that are expected to come out within the next decade or more. So obviously that bodes well for semiconductor equipment companies. Now, the semiconductor manufacturing process gets pretty tricky, right? So there's the chip design, like we saw earlier, but then there's the front end fabrication, and that's things that that's like the first step of manufacturing. That's the manufacturing of the wafers. Then you within there you have things like process control, the process equipment, you have the materials. Here's a lot of companies in that space. Outside of front end fabrication, you do have packaging, and this front end fabrication and packaging, which is also backend, is something I've discussed in that membership program. I do have a deep dive there where I've talked about it for maybe 10, 15 minutes. Obviously, I can't do a video here on it because you might get bored and it won't do well. But if you want to support the channel, make sure to check out those memberships. But we can see that the semiconductor manufacturing is pretty insane. So I want to continue with some other chip manufacturing companies, and these are ones that I personally get pretty excited about. So the 5 companies here are going to be, and this is stocks 11 to 15, are BE Semiconductor, Kulicke and Sofa. We also have Cantech, Onto Innovation, and Nova. And what's important here is, like I mentioned, after you create your wafer, right now we are kind of seeing this very interesting part in semiconductor, and with AI chips you're doing so many types of assembly process, like we see here: chip to wafer, memory stacking, die attach, die molding, interposer to a substrate, bonding, hybrid bonding, and the list goes on and on. And these are companies, for example, first BESI is one that provides a lot of solutions for these types of process. And we can see here, right, the 4th generation AMD chip that has about 50 die placement steps, include things like hybrid bonding and flip chip. We can all see Intel, they do have their Ponte GPU that has roughly 47 active chiplets. We can see Marvell and Amazon, they have data center solutions that have multiple chiplets. And like we saw, here are the different kind of styles and assembly process, and you do need types of different equipment. So BESI, like I mentioned, already provides a nice amount of the equipment for this market, so that obviously bodes well for investors. But we also have this one, Kulicke and Sofa. Kulicke and Sofa also works on thermal compression bonding, and here we can see thermal compression bonding is good for the building blocks of AI, things like multi-die, which is something used in CPUs and GPUs and TPUs. We also have another company here, Onto Innovation. So Onto Innovation works more on the inspection, the metrology of some extent, the process control, and they do mention that they are number 3 in this list. Here we can see that they offer products in various things, like for the memory market, for advanced packaging, for advanced nodes, and all types of metrology systems to make sure that, hey, these chips are being built correctly and have good yields four companies. Here we have Nova L2D, and I'll show you guys the tickers. Here they do focus on metrology as well, and they focus on different types of metrology affecting different segments of the market. Finally, we have Camtech. Camtech also works on metrology. It does seem like they focus a little bit more sometimes on the memory market, but we can see all these are metrology or some form of specialized equipment companies that are helping with as advanced packaging that is happening and this kind of chiplet structure that is happening right now with various semiconductor solutions. Now, BESI right now is the only one that's traded over the counter right now, and it has a market cap of $11.4 billion, ticker BESIY. We have Kulicke and Sofa, ticker KLIC, market cap of $2.8 billion. We have Camtech, ticker CAMT, up 176%, market cap of 3.2. And we have Onto Innovation, ticker NONTO, market cap of 7 billion. And we have Nova Ltd, market cap of 3.8 billion, ticker NVMI, traded under the Nasdaq. So, like I mentioned, all these companies, opposed to the ones we were looking at earlier, have a market cap of less than $10 billion. Now, if you ask me, hey, Jose, can these outperform the market thanks to AI? I'm going to say yes. While these are equipment makers, the specialized tools that they provide and their small market cap gives them a higher chance to grow dramatically. So while the previous list I was able to kind of go on an ETF, these are ones that I would rather kind of pick on a small basis because I do believe there's better opportunity here. The risk is not all of these are going to be winners. Some of these are going to be losers. Some of these have run up a nice amount in the past year or so. So something to keep in mind of. Now, stock number 16 here in AI chip. I'm going to put this in manufacturing equipment, but it's not really equipment. It's more in the manufacturing process, is Amkor Technology. And this is one that deals with packaging and test. And here we can kind of see the kind of manufacturing. First, you get your wafer manufacturing, you build your wafer, then you have to put these together in forms of packaging, and then you have your final product. And Amkor is one of the leaders here with kind of top AI packaging. Obviously, right now, the growth opportunities is advanced packaging continues to grow from the demand for AI solutions like advanced packaging needed from the H100. Obviously, the big risk here is if the demand is not strong as many anticipate for AI, that can obviously be a big red flag here. Amkor right now in the past year is down pretty much 1%, market cap of 7.4 billion. I do believe this does have the opportunity to kind of beat the overall market, but not one I personally would invest on at the moment. Maybe if I do a deep dive later on, I would kind of change my mind. Now, if we take a closer look at stocks number 17, this is going to be the memory maker. And here in the memory makers and pretty much in the advanced packaging, we do have a lot of companies internationally that deal in this space. But like I mentioned, I just want to look at ones that deal in the NASDAQ or New York Stock Exchange. So stock number 17 is Micron Technology, ticker MU. And here, memory is pretty much used in everything from AI and GPUs. You have like your GDDR on accelerators like the H100, the MI300, the Gaudi 2, you have HBM memory. In your CPUs, you also have HBM memory. You sometimes have your DDR kind of connected one way or another, and other types of solutions here in the semiconductor AI space. So the memory market is definitely pretty big as well. So can they outperform the market thanks to AI? This one, I'm gonna say it's a little bit better than meh. So it might be better than a TSMC's opportunity. The reason being, but limited to some extent, the reason being is similar to TSMC. I believe the biggest growth opportunities for memory companies like Micron is more just the turnaround stage of the consumer market, because most memory goes into the consumer market. So this is more of a, to some extent, a volatile, a more volume space, a more commodity to some extent. So if you see a turnaround story in the semiconductor space, that's where Micron can definitely benefit. Obviously, they do have a nice tailwind from the AI as AI servers continue to grow, consumer markets on an uptrend, and AI is being implemented into consumer products, increasing the demand for AI. But I believe the bigger tailwind and the most important tailwind is thanks to the consumer products. Big risk here is obviously the memory market is highly competitive, lower margins, and sometimes you do see things like pricing wars. Micron, ticker MU, market cap of $91 billion. So here in the networking, we have two main players. We have Broadcom and Marvell, and I really want to talk about their AI solution. And both these companies provide AI solutions that are meant for DSPs. These are digital signal processors, and they kind of look like this. So, digital demand for DSPs have increased dramatically with AI as you need networking communication to be so much faster. And here we can see why DSPs are essential. Marvell creates this chip that goes into the final product, and this helps kind of communicate and kind of transfer energy from optics or light into an electrical energy that can be used for data. So, this is very important because that kind of transformation, optics is the fastest moving light and obviously great for data centers. So the demand for DSPs continue to increase in future data centers from various solutions here, right? So DSPs are super important. And as you kind of continue to grow in these super clusters that are happening with multi GPUs where they all need to communicate with each other, these products are going to be very, very important. Can they outperform the market thanks to AI? I do want to say yes. Growth opportunities as AI workloads continue to grow. Therefore, networking communications also need to improve. One of the big risks here, I do want to say for Broadcom and for Marvell, these AI solutions at the moment are very small a portion of total revenue, but they do focus really big on the data centers, so that can be a massive, massive tailwind. So Broadcom is ticker AVGO, market cap of 518 billion. Marvell, ticker MRVL, market cap of $57 billion. Now we're coming to the end of the episode. We have two more. So stocks 20 to 22 are server makers. And again, there's a lot of different companies here internationally that focus in it, but the three here in the United States that mainly are Supermicro, Dell Technologies, and Hewlett Packard Enterprise HPE. And these are the ones that kind of get all these chips and all these networking solutions and put them together to create AI servers for the data center market. Now, can they outperform the market thanks to AI? I do want to say some of them, yes. My main pick here would be Supermicro as AI servers continue to grow, which could be bullish for these players. For some, more than others, depending on market share growth, right? And I do believe Supermicro is the one growing the market share the most. And here, it doesn't matter who wins as the top AI chip. Everybody's going to want a server. So these are the three players in this space. The big risk is obviously this is a highly competitive market, lower margins, and we tend to see pricing wars thanks to kind of market share battle. So Supermicro market cap of 18 billion, ticker SMCI. We have Dell Technologies, ticker DELL, market cap of 56 billion, and then we also have HPE, ticker HPE, with market cap of 20.6 billion dollars. So this one might be interesting right now. I did not think their market cap was so small, and if they do focus on the server market, want to keep a closer eye on. Now, the final four stocks we're going to take a closer look at are the cloud server providers. So these are the companies that are using these AI chips to bring or create some solution out of them. So obviously the data center players. Now, can they outperform the market thanks to AI? I want to say the answer is yes. As AI workloads continue to grow from new solutions, startups, software, APIs, apps, and integration to old systems, you're going to see a growth in AI workloads, which is going to need more computational power and more usage from clouding solutions like these players out here. Companies prefer to run on the clouds than build their own infrastructure, as building their own infrastructure gets very, very expensive. The big risk here is obviously they're spending billions on AI chips like the H100. On the bright side, the H100 is more than just an AI chip. It can be used for other accelerating solution. My top pick here is actually Oracle, and we can see Google stock right now, ticker GOOGL, market cap of 1.8 trillion. Amazon, ticker AMCN, ticker market cap 1.6 trillion. Microsoft, ticker MSFT, market cap of 2.9 trillion, and Oracle, the smallest of the bunch, ticker ORCL, market cap of 293 billion dollars. So again, I do believe all these markets are pretty interesting for the AI space. And here we took a closer look at 26 companies that are being impacted one way or another by the AI market. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.